Good afternoon. Thank you for your patience. I think we have the problem worked out. This is the 2017 Florida Tax Credit and Gardner Scholarship Program Financial Accountability Webinar. What we hope to accomplish today is to give some insight into some of the changes that were made and for this year, and then for those who have never been through it, just give some guidance on the agreed upon procedures as a whole.
Hello, my name is Gina Medlock. I'm the Program Accounting Manager, and I just wanted to let you know that if you wanted to ask a question, you will go to the QA drop-down and be sure that you select panelists to submit your question.
Thanks, Gina. Well, this is Joe Founts. You heard me speak first, and then you heard Gina Medlock, who's our Manager of Program Accounting. Also presenting today will be Susan Dugan, who is our Controller for Step Up for Students, and Christy Cruz, our Senior Staff Accountant for Program Accounting. We also have several others in the room that will be taking questions and monitoring things as we go along to hopefully make this a smooth process. The topics for today's webinar, we'll start out with just the facts. What's the, why are we doing this? We'll go over the law. Then why is this requirement necessary? Then we'll talk about how the AUPs were developed, major changes that you will see in this year's AUPs compared to ones you may have done in the past. Then we'll go through the AUPs themselves and walk through each one, specifically highlighting any changes that have been made. Then we'll go over the suggested next steps, mailing instructions, and provide you with links to resources. And then we'll have some time to take those questions that Gina just told you how to ask. And we'll try to go through as many of those as we can and give you some answers. I'm going to turn it over to Susan, and she's going to talk about the facts.
Good afternoon. So the facts. So private schools that receive more than $250,000 in Florida tax credit, also referred to as FTC, or Gardner, also referred to as PLSA funding, during the 2016-17 school year must submit a financial report to Step Up for Students no later than September 15th of 2017. Schools must hire an independent Florida licensed certified public accountant to complete this financial report. The agreed upon procedures, also referred to as AUPs, are defined procedures that will guide the CPA as they complete the report on behalf of the private school. This next slide is an excerpt from the law, which is the Florida Statutes 1002.395, which is for the Florida Tax Credit Program. And then there's another statute that is 1002.385, and that's specifically for Gardner. But as it relates to the AUPs, they refer you back to this particular section of the Florida Tax Credit Statute. I won't go into it in great detail, but you can see where we've highlighted in red some of the points I've already discussed, such the independent certified public accountant is required for any school that receives more than $250,000 in scholarship funds, whether that's from the Florida Tax Credit Program or the Gardner Scholarship Program. And the agreed upon procedures must uniformly apply to all private schools and must determine at a minimum whether the private school has been verified as eligible by the Department of Education, which is Section 1 of the actual procedures, and also has an adequate accounting system of financial controls, process for deposit and classification of scholarship funds, and has properly expended scholarship funds for education-related expenses. And that covers Sections 2 through 6 of the agreed upon procedures. Why is this requirement necessary? It's required, as I just stated, by the Florida Statute 1002.385, which is the Gardner Scholarship Program, and 1002.395, which is the Florida Tax Credit Scholarship. Financial accountability is essential for our program growth. As we grow as an organization, being able to offer scholarships, it also increases our fundraising cap, and also the appropriation of the individual scholarship amount to the students. So as we continue to grow, the financial accountability becomes more and more important as the program grows and allows us to give a higher scholarship amount to our students. Proof that the scholarship funds are safeguarded and spent on education-related expenditures. Currently, we have 681 schools receiving more than $438 million in FTC funds that will complete the report for the 2016-17 school year, which accounts for 80% of the total funds distributed. For Gardner, there are 13 schools receiving a total of $4.3 million in funds that will complete the report for 2016-17 school year, which is 7% of the total funds distributed. The AUP development process. As we mentioned, financial accountability was a measure passed by the Florida legislature in spring 2010. The agreed upon procedures program was created by CPAs in Step Up and also input from schools. Our new guidelines for this year are also developed in conjunction with AAA Scholarship Foundation, which is the other scholarship funding organization in Florida, and also the Florida Board of Accountancy. They're also reviewed and approved by the Florida Association of Academic Non-Public Schools. We also refer to them as FANS, member groups. The AUPs were executed successfully since the 2010-11 school year, and this is our 7th year where the AUPs are required. In accordance with the law, the AUPs were revised in 2013, 15, and 17. So we do these updates biannually. And this new update for 2017 was available in March 2017.
Thank you, Susan.
You're welcome.
So I'm going to talk in the next few minutes about some of the major changes. And if I had to pick one major change that was made, the largest change is that we have really refined or changed the definition of a material exception. In the old guidelines, the definition of material exception really required the CPA to use a lot of judgment. And in this new structure, CPAs are no longer required to use judgment in determining whether an exception is material or not. We basically will tell you that in each procedure, at the end of each procedure, it will say exceptions found on this procedure are material or reportable. And we'll talk more in a few minutes about what is material and what is reportable. So why did we make that change? The law, as Susan outlined, requires that the procedures be uniformly applied to all private schools. And the previous procedures, because there was so much judgment involved, one CPA could determine something to be material, and another CPA would look at the same circumstance and maybe deem it not material. And so it was susceptible to non-uniform application as required by the law. Another reason why this change was made is there were some concerns raised by the Florida Board of Accountancy that the definition of materiality in the previous procedures was insufficient to meet the standard required. If you'll look in that section AT, section 201.25, it says the concept of materiality does not apply unless the definition of materiality is agreed to by the parties. And there was a lot of concern expressed, particularly by the Florida Board of Accountancy, that was not being met. You'll also see there that the procedures, again, should be reasonably consistent findings in accordance with the AICPA attestation standards. And so because of that, in conjunction with the Florida Board of Accountancy and AAA Scholarship Foundation, we have made that particular change. So now we have two types of exceptions, whereas before we had one, a material exception. Material exceptions are those that are found material on the procedure, on certain procedures throughout the agreed upon procedures. So it'll say that this is a material exception. Those are reportable to by the CPA in their report to the SFO as in the past. And the SFO will report those to the Florida Department of Education. Reportable exceptions are those exceptions found on procedures that are deemed important but not material to the program. So we have made, in writing these procedures, we have made that determination that it is a reportable exception as opposed to a material exception. Again, it is reportable by the CPA in the report, so you'll have to designate it as a reportable exception, but we will not report reportable exceptions to the Florida Department of Education unless that same or similar exception has been found 3 consecutive years. So on the 3rd year, you would report that. And just so everyone knows, we're starting that this year. So you won't go backwards and look and say, well, this has been reported. Really, you'll start that clock with this year and go forward. The next major change, the guidelines have been clarified to ensure more consistent application of procedures. For instance, if you look at the old guidelines, step 3F said identify whether an annual budget is utilized. It was just that simple. The new procedures, which in this year's it will be 3E1, would be by inquiry, determine whether an annual budget is prepared and approved by the school's governing body before the start of each fiscal year and any budget amendments thereafter. And actual results are periodically reviewed in comparison to budget and reported to the school's governing body at least twice annually. So we're wanting to make sure that not only is that a budget exists, but that you're doing something with it, that you're using it to compare to actual, and that you're reporting it to the board, and that it was approved by the governing body. And then we're going one step further, where we're going to test some of these things. So testing of compliance has been introduced to procedures. So if you'll take the example above, in that same instance, we're now saying that the CPA should review all minutes of the meetings of the school's governing body that occurred during the current school year and those immediately preceding it, and determine adherence with step 3E1, so in adherence with the step right above you there. So we want to make sure that yes, the school is doing this, and the CPA is verifying that through reviewing of the minutes and looking at reports to the governing body. The next major change has to do in Section 5 with education-related expenses. The previous procedures only required the CPA to identify education-related expenditures at least totaling the dollar value of the Florida tax credit scholarships received. So basically, if you received $300,000, you had to identify $300,000 worth of education-related expenditures and stop there. The new procedures provide broader examples of education-related expenditures. The CPA is to prepare a list of education-related expenditures. It should be a complete list with a total of all education-related expenditures, and then that list should be included in the report. The CPA should then sample that list based on a sample size table provided in the guidelines. We'll talk about that later, and ascertain that the expenditure is education related, was properly authorized in accordance with the school's internal controls, was properly classified in the general ledger, and was paid timely and accurately from the school's bank account. And in this instance, timely is considered reasonably within terms. So if you had 30 days to pay it and you paid it in 35 days, that's kind of reasonably within terms. Again, the CPA would use some level of judgment there. The next major change we'll talk about is in Section 3. In the test of internal controls and the test of education-related expenditures, shared expenses must be reviewed by the CPA. So what are shared expenses? There are those shared with a non-school entity such as a temple, mosque, or church. A lot of our schools are associated with a house of worship of some sort, and we want to make sure that expenses that are shared are reasonably allocated. And you'll see there in the second bullet point that they should be allocated in a systematic and rational approach. Well, what does that mean? And I think most CPAs would be able to look at something and determine if it was a systematic and rational approach. But as examples, things like rent, mortgage, utilities, property-related expenses, maybe square footage, relative square footage would be the way to do that, as an example. Salaries and benefits of shared employees would be allocated by relative hours worked on each entity, as an example. The next major change is in Section 4, and it's on the observation of the FTC deposit. Now, this is only for FTC, not for Gardner schools. But the CPA is to visit the school on a day that an FTC deposit will be made, observe the deposit process to ensure adherence to the check policy, and determine that the endorsement matches the named payee on the check or power of attorney on file and matches the information in the student's file. I want to be clear that we're not asking the CPA to necessarily actually observe the parent endorsing the check. The thing that we're trying to make here is we need you to see the front and back of that check and see that endorsement before it gets deposited. And so as long as you can see that before it gets put into the bank account, you should be able to accomplish this. So those are the major changes, and again, we're going to talk about those as we go through the individual procedures. So the procedures we're going to cover today, the sections are school eligibility, adequate accounting system, adequate system of financial controls, adequate process for deposit and classification of scholarship funds, properly expended scholarship funds for education-related expenses. And if you'll notice, sections 1 through 5 align with the statute. And then there were other procedures that frankly were in the previous AUP guidelines that we thought more appropriately belonged in a section of their own, and so we moved them to section 6. And now we're going to turn it over to Christy to talk about how to determine school eligibility.
Good afternoon, everyone. My name is Christy Cruz. I'm the Senior Staff Accountant here at Step Up for Students. I'll be going over the school eligibility profile. This is a material section. On the left-hand side, you will see the instructions to the CPA. Please obtain the compliance letter or other proof of eligibility from the Florida Department of Education, and note that the proof of eligibility covers the school year to which the AUPs are being performed and include copies with the report. Please make sure it is for the school year in which you're going over, not for the upcoming school year. On the right-hand side, you'll see the to-do for schools. Please locate all of the DOE compliance letters that cover the 2016-17 school year and reflect your school's compliance status, or you're able to use the Florida Department of Education website to verify compliance. You'll see here we have a location to navigate to the floridaschoolchoice.org and select private school login on the left menu. Please log in using your unique 4-digit code and password in the middle of the page. You would select View School Info under Administrative section. Please be sure to print the entire history of private school compliance to validate compliance for the 2016-2017 school year. Please do not provide just a snippet. Please print the entire section. School compliance must be approved for the program to which the procedures are being applied to. And now I'd like to turn it over to Gina to go over the accountability section.
Hi, this is Gina, and I will be covering the adequate accounting system, which is also material. The CPAs need to identify and document the accounting software or systems used to maintain the school's financial records. Observe the accounting system used by the school. For the schools, you need to be prepared to show the CPA the software system you use to maintain the school's financial records. Examples of these
the software could be Quicken, QuickBooks, a paper ledger, checkbook, Excel, etc. Next, Section B is the instructions to the CPA. Determine if the accounting system or software systems being used allows the school to record financial transactions conducted by the school, including deposits and disbursements, in a complete and self-balancing accounting system, and it is capable of generating a trial balance, financial statements, and student account statements and other subledger reports. If a separate non-self-balancing system for student account statements is used, note whether it is regularly reconciled to the general ledger. An example of a non-self-balancing system could be Excel, and you would want to make sure that this, if they use an Excel spreadsheet, that this reconciles back to the general ledger, and we would consider regularly would be at the month-end close, so monthly. For the schools, you need to be prepared to show how the accounting system records financial transactions conducted by the school, including deposits and disbursements, and is a self-balancing system requiring debits and credits, and that it produces a trial balance and financial statements, and produces student account statements and subledgers such as AP, AR, fixed assets, etc., and how they are reconciled to the general ledger. Now I'm going to turn it over to Susan to cover the adequate system of financial control.
Hi, so this particular section, 3A, is a reportable report if you find any discrepancies within your inquiries. So on to the right, there's instructions to the CPA. So by inquiry, you would determine whether the school scholarship funds are held at a federally insured depository institution, or they could also be a part of NCUA, which is for our credit unions. For the schools, you need to determine if the depository institution holding the scholarship funds are federally insured with FDIC or NCUA. Continuing on, still Section A, but Part 2, the instructions to the CPA is to review 3-month bank statements, including the state's fiscal year-end balance bank statement through June 30th, 2017, and determine that the daily account balance did not exceed the FDIC limit of $250,000 during the school year being tested. For the schools, you would provide the CPA the state's fiscal year-end bank statements, which is June 30th, 2017, and the 2 other months requested by the CPA. If your school has not closed the year by the time the CPA is there to do your agreed-upon procedures, then the CPA can be instructed to review the May 31st, 2017 bank statements. And this is a new section for this year, so please pay close attention to the new requirements. Continuing on to Section B, non-school expenses. This particular section is a material section. So the instructions to the CPA is by inquiry, note if the non-school expenses are dispersed from the school's bank account, and if so, note whether they are being identified and or tracked separately from the school's expenses. Non-school expenses are those that are not education related. For the schools, you would prepare to identify to the CPA any non-school expenses are paid from the same bank account and how they are tracked separately from education-related expenses. Continuing on, Section B2, instructions to the CPA, select a sample of 5 non-school expenses and determine whether they are being identified and tracked separately from the school's expenses. For the schools, you would provide the CPA with a schedule or list of non-school expenses and show the CPA where the sampled expenditures are recorded. This is also a new section. A lot of our Q&A at the end of each webinar that we've had has had a lot of questions about non-school expenses, so we will cover those at the end. Continuing on, Joe will continue on with Section C.
Thank you, Susan. So I'm going to talk about internal controls. The CPA should by inquiry determine if the school has written policies or standard practices to establish proper financial controls, including segregation of duties, and the policies or practices are being consistently followed for cash receipts, capital expenditures, payroll, operating expenditures, and shared costs. And again, we talked earlier about shared costs, but those are costs that are shared by the school with another organization. And those should be allocated between the organizations in a systematic and rational approach. For the schools, you should provide the CPA the school's procedures for depositing and recording monies received, spending money for payroll, operating expenses, capital expenditures, and shared costs. And you should help them understand who performs the steps in the process and what approvals are required. Step 2 of Section C really is just in the absence of written policies, because we understand that a lot of smaller organizations may not have written policies, but you have standard practices. So briefly describe the standard practice used to establish proper financial controls over the transactions listed in 3C1 above. And then later in sections 4, 5, and 6, we'll actually have testing procedures to test that those processes are being followed. From the school's perspective, you should describe those procedures to the CPA in the absence of actually having them written in a formal policy, and then provide the CPA with the requested sample documentation and assist the CPA with the testing procedures that are described in later sections. Next, we're going to talk about bank reconciliations. This is a material section. The CPA by inquiry should note whether reconciliations of all bank accounts are completed within 60 days of each month end, including an independent review done by the school's management, and resolution of any reconciling items are in process prior to the bank's deadline for reporting errors. Most banks have a deadline by which if you do not report an error on your bank statement, they're going to deem it finalized, and it's going to be very difficult to get them to correct it. So we want those resolutions to be in process and the bank's been informed. For the schools, what is your process for reviewing bank reconciliations? Who completes the bank reconciliation? Who reviews the bank reconciliation? What is the time frame for the process and for resolving reconciling items? And so you'll need to share all that with your CPA. Section 2 of Part 3D, which is a new section, the CPA should, using the bank statements reviewed in Step 3A2 above, review the associated bank reconciliations and determine whether they were completed within the guidelines outlined in 3D1 above. From the school's perspective, you'll provide the CPA with the bank reconciliations for those statements and with any support for when the reconciliations were completed, reviewed, and the reconciling items were resolved. The next part of Section 3 is on budgets and financial statements. This is a reportable section. By inquiry, the CPA should determine whether an annual budget is prepared and approved by the school's governing body before the start of each fiscal year and any budget amendments thereafter, and whether actual results are periodically reviewed in comparison to budget and reported to the school's governing body at least twice annually. We talked about this earlier as some of the changes that we had in place. From the school's perspective, do you describe for the CPA whether you have an annual budget? Is it approved by the school's governing body before the start of the fiscal year? Are there any amendments to the budget, and are they approved by the school's governing body? And then are actual results compared to budget periodically and reported to the governing body at least twice annually? Part 2 of Section 3E is a new section. Again, this is a reportable procedure. The CPA is to review all minutes of the meetings of the school's governing body that occurred during the school year and those immediately preceding it, and determine adherence with Step 3E1. From the school's perspective, you need to provide the CPA with copies of all the minutes of the meetings of the school's governing body during the 15-16 and 16-17 school year so that they can make that determination. And now Susan is going to discuss Section 4, the adequate process for deposit and classification of scholarship funds.
Thank you. So the next 6 or so slides, we're going to break this up into two pieces because Step 4 has a different test for Florida tax credit scholarships than it does for the Gardner scholarship. So first we're going to talk about the Florida tax credit scholarships, and this section is material. So 4A, instructions to the CPA is to obtain the scholarship funding organization's check cashing policy and inquire if the school is following that policy and complying with the Section 1002.395 of the Florida statute, to include obtaining the guardian's signature and depositing the check into the school's bank account. For the school, you provide the CPA with the SFO's check cashing policy and provide or describe to the CPA the school's procedures for endorsing, depositing, and recording scholarship payments. Section B of 4 is a new section. It is still considered material. For the CPA, you need to arrange to visit the school on a day that an FTC scholarship deposit will be made. Observe the deposit process and determine the check cashing policy in the statute referenced above were followed. Determine whether the parent or guardian endorsement matches the named payee on the check or the name of a power of attorney on file granted to a person that is not related to the school and matches the information in the student's file with the school. Continuing on for Section B, for the school, you would coordinate with the CPA a visit on a day when a scholarship check deposit will be made. Allow the CPA to observe the scholarship check deposit process of a check chosen by the CPA and provide the information requested by the CPA from the chosen student's file. Continuing on to 4C, this is also a new section and is still deemed material. For the CPA, you would select a sample of the greater of 10 students or 5% of the scholarship student population, test those sample students' scholarship checks and ascertain the funds are classified in the general ledger as tuition, books, and fees payments and the corresponding general ledger bank account. Also determine whether the funds are posted to each student's tuition account statement and whether the funds are deposited into the school's bank account. For the school, in Section 4C, you would provide the CPA with the letters of transmittal from the SFO listing the scholarship students that have received payments. You'll assist your CPA with tracing the sample scholarship payments to your general ledger, the student's account statement, and the deposit into the school's bank account. Section C of Part 4 is where it changes slightly for the Gardner Scholarship schools, and this is still material, and this is a new section. So for the CPA, you're going to select a sample of the greater of 10 students or 5% of the scholarship student population, and you're going to test those student scholarship payments to determine whether the sample student scholarship payments were recorded in accordance with the policies or standard practices that were identified in Section 3C1, and whether the funds are classified in the general ledger as tuition, books, and fees payments in the corresponding general ledger bank account. Also, you'll determine whether the funds are posted to each student's tuition account statement and whether the funds are deposited to the school's bank account. So the only real difference in Section 4 between the two scholarship programs is you receive a check from the Florida Tax Credit Scholarship and you receive an ACH payment for the Gardner Scholarship. So the testing is slightly different, but still the same. Continuing on Section C for the schools, you'll provide your CPA with a list of the scholarship payments received by student, and you'll assist the CPA with tracing it to your general ledger, the student's account statement, and the deposit into the school's bank account. And now I'm going to turn it back over to Joe. He's going to discuss Section 5, which is the properly expended scholarship funds for education-related expenses.
Thank you, Susan. So again, as Susan said, this is Section 5, properly expended scholarship funds for education-related expenses. It is a material section. From the CPA's perspective, in Step A, you should obtain the dollar value of the programs scholarships received for students attending the school. By scanning the general ledger, identify and prepare a list of education-related expenses and determine that the total of education-related expenses is at least equal to the dollar value of the FTC scholarships received. So this is similar to what was in the prior guidelines, but in this case we're preparing a complete list of all education-related expenses, and then we're just determining, the CPA should determine that amount of education-related expenses exceeds the dollar value received from the FTC or Gardner. I think there's a typo here. It should be FTC or Gardner scholarships. From the school's perspective, you should provide the CPA with the letters of transmittal received from the SFO for FTC or a schedule of Gardner funds received in 2016-17. So the FTC schools are very familiar with our letters of transmittal. Gardner schools do not receive a similar document, so any Gardner schools will have to provide a schedule of the funds received from the Gardner program. And then the school should assist the CPA in identifying and preparing the list of education-related expenses incurred in 16-17. This is a new procedure, or not, it's not a new procedure, but it's a new clarification, really, of education-related expenses. I think the old guidelines really did not give a lot of clarity there. We're trying to clarify what we mean by education-related expenses. But they include, but are not limited to, school-related personnel expenses, and that can be administrative people that work on the school as well. It certainly can be curriculum. That's probably one of the easier ones to determine as an education-related expense. But classroom technology, building expenses, you certainly have to have a building. And so there are all sorts of expenses associated with that: rent, mortgage, interest, property taxes, insurance, etc. And then classroom instructional materials. Again, this is not an all-inclusive list, but the key to this is that it is related to education, not related to some extracurricular activities or related to a non-school entity like a church. Not related to sports programs, things like that. From the school's perspective, you should be sure to identify any costs that are shared with another entity, such as a church, temple, or mosque, and then provide the CPA with allocation methodologies for shared expenses. Again, the allocation methodologies, as we said before, must be systematic and rational. We'd like to see, year in, year out, the same approach being used for the same type of expense. Section B of Part 5 of Step 5. This is where we're actually going to sample the education-related expenditures, and this is new. So using the list developed in Step 5A, select a sample of education-related expenditures incurred during the school year using the table below. So if you have 250 to 500,000 of education-related expenditures, then do a sample size of 30. 500 to 750, you would do a sample size of 500,000 to 750,000. You would do a sample size of 45, and then 750,000 and above, you do a sample size of 60. The last item on this slide, I want to point out, though, each of the categories that were listed in Section 3C1, 2 through 5, which are going to be payroll, capital expenditures, operating expenditures, and shared costs, need to be represented in the sample by at least 10% of the number of items selected. So if you have a sample size of 30, then we need to see at least three of each one of those categories included in the sample. That way we're sure to have coverage of all those categories. If for some reason you went through a year, you didn't have any capital expenditures, then just, you don't have to do that. You just need to note that. For each item sampled, the CPA should scan the supporting documentation and determine whether the expenditure is education-related, was properly authorized in accordance with the policies identified in Step 3C above, is properly classified in the general ledger, and was paid timely and accurately from the school's bank account. And again, timely there, we mean paid within terms. Of course, there can be circumstances where the school may be in dispute with the vendor over the amount, and so that needs to be taken into consideration. If there was indeed a dispute with the vendor, then you can take that dispute time into consideration of timely. For payroll-related expenditures sampled, we also want you to recalculate pay based on corresponding time and attendance, pay rate and deductions records, and properly authorized in accordance with the policies identified in Step 3C above. For the schools, you should provide the CPA with supporting documentation for the education-related expenditures that have been sampled. Assist the CPA in determining that the expenditure is education-related, was properly authorized, is properly classified in the general ledger, and was paid timely. And then for payroll-related expenditures, you should assist the CPA, providing them all the corresponding documentation and helping them determine that it was properly authorized and the pay rate deductions and deduction records were correct. So now we'll turn it over to Gina to talk about Section 6, which is other procedures.
Thank you, Joe. This section is a reportable section, also formerly Step 5B. For the CPA, you will need to obtain a copy of the tuition and fee schedule for the school year being tested, using the sample selected for Step 4C. Confirm the tuition charged the sample students is consistent with the tuition policy for all students. For the schools, you will need to obtain a copy of the 16-17 tuition and fee schedule as distributed to the parents and guardians. Assist the CPA in determining whether tuition and fees are being charged equally among scholarship and non-scholarship students. Section B, the CPA will need to obtain the school student attendance policy, determine if the policy for program scholarship students is consistent with the policy for all students and is consistent with state law. Using the sample selected for Step 4C, scan the attendance records for each selected student and determine whether they meet the school's attendance policy. The schools will need to provide the CPA with the school's attendance policy, provide the CPA with attendance records for each of the selected students, and assist the CPA in determining whether the attendance records of each of the selected students meets the school's attendance policy. Section C, the instructions for the CPA is without advance notice to the school of the sample of students, select 10 students from the scholarship payment history and confirm the student's presence in school that day. If the student is not present, determine whether the student is listed as absent on the school's attendance record. CPAs need to be sure to comply with the school's policy on visitors. The school will need to make sure that this is completed before the end of the year, because the students won't be there to have this test done. And this is a material section?
Yes.
Yes, this is the material section. So this must be completed. So please make sure, CPAs, that this happens before the end of the school year. And now I'll pass it back to Joe to cover the specific guidelines governing the reportability of exceptions.
Thank you, Gina. We talked earlier as we were going through the major changes about the change in the definition of a material exception. And so this, we're going to go back into that section a little bit and go a little bit deeper. Exceptions found in the course of performing the AUPs fall now into one of two categories depending on the significance of the attributes being tested to the integrity of the programs, either material exceptions or reportable exceptions. Again, as we went through each one of these procedures, we tried to tell you, and the written agreed upon procedure guidelines specifically say which it is, but we tried to tell you as we went through. The guidelines for each procedure, as I said, indicate whether it's material or reportable. All material exceptions will be reported to the Department of Education by the SFO and will require preparation and submission of a corrective action plan by the school. That's just like it has been for the previous years. The corrective action plan is really just an opportunity for the school to say, here's how we're going to fix this. And then they submit that to the SFO for material exceptions. No corrective action plans will be required for reportable exceptions. Reportable exceptions should be reported to the SFO in the CPA's report. The SFO may provide a recommendation for corrective action to the school. So if we get a report from a CPA and we see a reportable exception, the SFO in its review process, may send a letter to the school saying, we suggest you fix this, and maybe suggest how it could be fixed. But the school will not be required to submit a corrective action plan. If the same or substantially same reportable exception is reported in 3 consecutive years, that same or substantially same exception should be reported as a material exception in the report for the 3rd year by the CPA. It should remain as a material exception until it is corrected in future years. So what are the next steps? If you haven't already done so, as a school, you need to engage an independent certified public accountant. I'm sure there are plenty on this call that would be glad to do the work. You need to provide the CPA with the agreed upon procedures guidelines. Request the CPA to watch this webinar if they have not already participated in it. We will have it online tomorrow at stepupforstudents.org. And the section for scholarships and for schools and providers. Be sure your CPA conducts the attendance review, as Gina said, on site before students leave for the school year, or you will have a material exception. There's just no way to do that after the fact. Your mailing instructions for the CPAs when the CPAs submitting the report?
It can be either one.
Either one, mm-hmm. Okay. So when you send them in to us, there's the address there to Christy Cruz, care of Step Up for Students, 4655 Salisbury Road, Suite 400, Jacksonville, Florida, 32256. The reports must be received on or before September 15th of 2017. There was some legislation proposed that date moved to August 15th. We think that's going to be removed and that September 15th will be the date. If that changes for some reason, we will let you know. Obviously, that will be difficult to meet that date, especially if the legislation is not passed until later. But there will obviously be a lot of cooperation there and leniency on the date if it is. But right now it's September 15th, and that's the date it has been, and that's the date I anticipate it will be. Resources available, you can find the webinar, as we said. There'll also be FAQs, frequently asked questions. What we're doing is we're taking all the questions that we've received from CPAs since the date that we distributed the agreed upon procedures back on March 15th, and we're putting them into an FAQ type format. We're also taking all the questions that we've received in the webinars that we're doing, and we'll put those into that same format. and we'll have that available out on stepupforstudents.org. I do want to point out that if you have questions that have not been answered in an FAQ or were not answered in this webinar, please email aup@sufs.org, and someone from this team that's in the room here today will take that and answer your question. And now we are going to open it up. We have accumulated a number of questions, I'm sure, while we have been going through the webinar, and we'll try to answer some of those.
So one of the major questions that we had, and as Joe just briefly went over it, was if the report can be mailed by the CPA or the school. Either one can mail the report, but it does need to be mailed to us, not faxed to us. A physical copy must be received in the office by September 15th. Either the CPA or the school can mail it, but please be in communication with your CPA. A lot of times the CPA will send the report to the school, and the school thinks that maybe the CPA forwarded the copy. So please be in communication with the CPA on whether or not either the school or the CPA is going to mail that form in for you. And then we also had questions related to non-school expenses, providing examples of those.
So some of the examples of non-school expenses, as Joe mentioned in earlier slides, was any extracurricular activities that the school has, whether it's football, baseball, that type of thing. None of those expenses are considered education related. If you have a bus on school premises that is used for extracurricular activities, or maybe church functions, or it can also be used for school functions like field trips, only the portion of the school functions, such as field trips, can be considered an education-related expense. And of course, if it's shared with a other business entity like your church, then that would be considered a shared expense, and you would report it in that fashion. Some other school-related expenses would be anything that would have to do with another entity that shares the same facility as the school. So that could be any church-related expenses, any administrative expenses that are shared between the school and the church. You would show that as shared cost. Trying to think of some other things.
Utility.
That utilities would be a shared expense as well, but you have to have the lights on in order to educate the students, so a part of that would be education related. So anything that is not teaching the students, so anything that's not personnel expenses for teachers, curriculum, school equipment, in the classrooms, playground equipment would be education related because that's considered a physical education function, would be non-school expenses. And we can put out with our FAQs some additional listing of non-school expenses that we've seen in prior year reports, if that would be helpful.
We also had a lot of questions pertaining to the $250,000 limit. Whether does the school now have to have multiple accounts to maintain balance under $250,000? We had these questions on Friday, and we'll also have some questions relating to that today. And then also if the quarterly distribution is already at $250,000, what should they do?
Yeah, so there are several ways to manage this, and larger businesses usually have to deal with this on a regular basis. Certainly Step Up for Students has to deal with this. There are several ways to manage your balances in excess of $250,000. One is to have what's called a sweep account. I had a school today ask me about what's called a repurchase agreement. That's another type of it's a sweep type account where basically the excess balance is swept out of the account and it's invested in treasury obligations. So we suggest that you make sure that they are treasury obligations because those are the most secure investments in the country. So you can have this separate account where literally the balance is swept out of your regular account and swept over into this sweep account. And so instead of being insured by FDIC, and I think you can set that to anything over 250. So your ending balance will be swept over into this other account. And that's what we're looking at. We're looking at the ending balance for the day. Some people asked, well, how do we determine that? Well, each of your bank statements should have a daily balance section, and the CPA can look down through there and see what was the daily ending balance of the account at any point in time. If you're concerned about the day you receive the money from Step Up, of course you have to get the check signed by the parents, so they're probably not going to all rush in on the day of. But if that puts you over 250 with a sweep account, it would take that excess money and move it over into the sweep account. Another way to manage it is have another account at another bank where you can move money back and forth. I certainly recommend the sweep approach because you can do it all within your bank. But that's the way to manage an excess balance.
Okay, and then we also had, since this is a brand new year, are we allowed time to correct this? Are we going to be lenient with the new procedures?
Yeah, we will report to the DOE that this is a new procedure that was just instituted this year. We would hope in future years we can get the laws changed where these AUPs will be in effect for the next school year, so that you're starting the school year knowing the rules. But since that's not the case this year, we will inform the DOE that this is sort of a year one exception, and that will be taken into consideration.
Okay, and then we also had, if a CPA is monitoring, say, 2 schools under different names and they have a different location, are they having to do a report for each school?
Only if both schools exceed the AUP limit of 250,000.
And they would have to have a separate DOE code as well.
That's correct.
So if they have a separate DOE code for each location, then it would be 2 reports.
Right. But if they have a single DOE code, then it would be 1 report, but you'd have to look at both schools combined.
Correct, for the limit.
Yeah.
Okay, and then we had some questions in reference to looking at the school board minutes. They said some school board minutes have personal student information in there. Are they able to black out this information for the CPA?
Yeah. I would suggest that I want to be careful about redacting, blackening out sections, but it's totally appropriate. There's no benefit to the CPA, in my view, that what child was disciplined or whatever. So yeah, any personal information that has to do with a student has no value for this purpose. I would not suggest blackening out the entire section, but I would remove the names of the students.
Yeah, because
do you have any other?
I'll just add to that, because you could have a student on those board minutes that are part of your attendance policy, and so if the CPA is reviewing that particular student in regards to your attendance policy, then they would need to see the minutes where you took that discipline based on your policy.
Yeah, that's good.
And then we had some questions referencing the fees to the CPAs. Are they considered an educated related expense, the fees for the AUP?
I personally think yes, simply because in order to, obviously the funds you receive from us are education-related funds. In order to get those funds, you have to go through this process. So I would say yes, that they're an education-related expense.
Okay, and section 5B, we had some questions in reference to explaining the definition of the word scan. In testing expenditure samples, do you mean scan digitally, or the CPA meaning of scan it?
Visually scan it. So you just taking the document and visually looking through the document for appropriate, relevant information.
Okay, and then we start our budget after completing our fiscal year to more accurately give us a starting point. why does this have to be completed before the fiscal year? I have a few questions on that.
Can you repeat that again? I'm sorry.
Yeah, I think
They start their budget after completing their fiscal year to more accurately give them a starting point. Why does this have to be completed before the fiscal year?
Well, the majority of the school's operating expenses, I think, could be budgeted out, but if you're looking at your total enrollment and you're not quite there at the beginning of the school year, then I think we could be a little lenient on when that's approved, because some schools are gauging how much their enrollment should be, but it usually could come in higher or lower, and that would affect their budget.
Yeah, I think the real objective here is before the school year starts. So if it's approved after the fiscal year starts, but really before the school year starts, I think the CPA would just need to know that.
Correct.
Yeah.
Okay, and then last question. You mentioned the parent/guardian should not be related to the school. How would this be addressed if either the parent or guardian do work for the school and they receive step-up funding? How would this be reflected in terms of reporting?
Well, I think that's okay. The point was that the power of attorney did not need to be someone that was related to the school. So obviously, if the parent works for the school and has a child in the school, which we know happens, then yes, I think that's fine, obviously.
Yeah, you would just want to look at your internal controls. So if that particular parent who has a student at the school and the parent also works for the school should not be the same person that is making the deposits of the checks, of the check they just warranted.
Right.
And their signature. So if we did have a case like that, the school would just want to put a little bit more controls in place to alleviate that parent from having to sign the check, deposit the check, and record the check with their signature on it.
The majority of the questions did relate around the $250,000 limit, non-school expenses, most of the questions that we've covered here today. As Joe stated, we're going to send out individual responses to the questions and answers that came in today. You can also email the AUP@SUP.org. If we haven't covered your question and you don't see that by the printout of the presentation on April 26th, tomorrow, or if you don't see that in the FAQs that we've put out as well, please just email us at AUP@SUFS.org, and we'll be able to answer that for you.
And it may take us a few days, by the way. We will start putting the frequently asked questions out there, but obviously wrapping this up at slightly after 3, we may not have your particular question out there yet. It may take us a few days to get all that published and put out there, as well as respond to you, but we hope to have a lot of this done by the end of the week. Anything else that we need to address? Great. Well, we appreciate your time. We hope that this was helpful, and again, use the resources that we've provided and the AUP email address to ask questions, and we'll do our best to try to answer them in a timely fashion. Have a wonderful day, and we appreciate your time. Thank you.
Thank you.